Ever looked at a trade you just closed and thought, how did I screw that up again? Or worse, you didn't close it because you felt it had to go a little higher. In the next few minutes, you're going to learn why smart traders do dumb things, why greed doesn't feel like greed when it shows up, and the one emotional trigger that quietly drains accounts without anyone noticing. Here's the promise. If you stay with me until the end of this chapter, you'll understand something most traders never hear explained clearly. Greed is not an emotion you feel, it's a signal your brain sends at exactly the wrong time. And once you see it, you can't unsee it. Quick question, and I want you to answer honestly. Comment below. When was the last trade you took because you had to be right? Not because it fit your plan, not because the risk made sense, but because you wanted the market to agree with you. If you're smart, disciplined, and analytical, you shouldn't be here. Yet, here you are. And that tells me something important about you. You're not broken, you're human. Let's fix the part that keeps costing you money. Welcome to Why Greed Kills Traders and How to Master It. You didn't come here to hear that greed is bad. You already know that. You came here because despite knowing better, something keeps pulling your finger back to the buy button, keeps you in trades too long, keeps you sizing just a little bigger after a win. And here's the uncomfortable truth most trading books won't say out loud. Greed doesn't show up as greed. It shows up as confidence, as certainty, as this time is different. That's why intelligent traders lose money in ways that don't make sense on paper. Let me tell you a quick story. Jesse Livermore, one of the most famous traders in history, didn't blow up because he didn't understand markets. He blew up because after winning big, he stopped listening to risk. He felt invincible. He pressed harder, and the same mind that built a fortune helped erase it. This audiobook isn't about making you fearless. It's about making you dangerously calm. Right now, whether you trade stocks, crypto, forex, or futures, your biggest enemy isn't volatility. It's the moment after a win and the moment before a loss. Think about it. Why do traders overtrade after winning days? Why do they increase size when they should be protecting capital? Why does discipline vanish exactly when confidence feels highest? That's not lack of knowledge, that's biology. And before we go any deeper, let me be crystal clear about what you'll achieve by listening to this entire audiobook. You'll learn how to control emotional surges without suppressing them, build trading rules that protect you from yourself, understand when greed is hijacking your decision-making, and shift from outcome obsession to process dominance. This isn't hype, this is psychological mechanics. Now, here's something you might not have heard before. Greed is not the desire for money. Greed is the brain's reaction to anticipated reward. Your brain doesn't care about consistency. It cares about dopamine. When you're up money, dopamine rises. Your perception of risk drops. Your belief in your edge inflates. And logic quietly steps out of the room. That's why traders say things like, "I'll just let it run a bit more. I don't want to cut it now. I don't want to miss the big move." Sound familiar? Let me ask you another question. Have you ever followed your plan perfectly until you were in profit? Then suddenly the rules felt optional. If that's you, you're in the right place. Because this book is not about eliminating greed. That's impossible. It's about mastering it. Most traders try to fight greed with willpower. That never works long term. Professional traders build systems that assume greed will show up and neutralize it before damage is done. Paul Tudor Jones once said, "The most important rule of trading is to play great defense, not great offense." That's not a motivational quote. That's a psychological survival strategy. Defense protects you when your emotions lie to you. And here's where this chapter sets the foundation for everything that follows. You don't lose money because you want too much. You lose money because your brain confuses possibility with probability. Greed whispers, "It could go higher." Discipline asks, "What's the risk if I'm wrong?" One voice feels exciting, the other feels boring. Markets don't reward excitement, they punish it. Now, let me ignite something in you.
What if I told you that the traders who make it long-term don't feel less emotion, they feel emotion earlier? They sense greed the moment it enters their thinking, not after the loss, not after the blown account, but at the first subtle shift in behavior. By the end of this chapter, you'll know how to spot that shift. Let's test your awareness right now. Fact-based question number 1. Why do most traders break rules after winning trades instead of losing ones? Hold that thought. Fact-based question number 2. Why does increasing size feel logical right after a streak? We'll answer both before we move on. But first, understand this. This audiobook is a mirror. If you're uncomfortable at times, that's a good sign. Growth doesn't happen where comfort lives. And if you're listening to this while trading or driving or late at night replaying trades in your head, I want you to hear this clearly. You are not behind. You are early in your awareness. Now, let's answer those questions. Why do traders break rules after winning trades? Because wins reduce perceived risk. Your brain says, I've been right before, I'll be right again. That confidence feels earned, but it's chemically amplified. Why does increasing size feel logical right after a streak? Because dopamine doesn't just reward results, it rewards expectation. Your brain starts pricing in future wins that haven't happened yet. That's the unseen mechanism killing consistency. And here's the thing most people never hear. Greed doesn't push you to trade, it pushes you to abandon protection. Stops get wider, targets get ignored, risk gets justified. Quietly. If this is clicking for you, drop a comment right now and tell me, what emotion has cost you more, greed or fear? In the next chapter, we're going deeper. We're stepping inside the brain itself. You'll see exactly how dopamine, risk perception, and reward anticipation hijack traders at the worst possible moments, and how to shut that door before it opens. Stay with me, because once you understand how your brain works in markets, greed loses its grip. And that's where real control begins.
Ever stayed in a winning trade and thought, I'm finally locked in, I've got this, only to watch it flip and wipe out half the gains? In the next few minutes, you're going to learn why greed almost never announces itself, why it feels reasonable when it's most dangerous, and how it sneaks into your thinking dressed up as confidence. Here's the promise. If you listen all the way through this chapter, you'll be able to spot greed before it costs you money. Not after the damage, not in hindsight, in real time. That awareness alone can save years of frustration. Quick question for you, and be real about it. Comment below. When was the last time you said, I'll just let it run a little more, and didn't follow your exit? If that line sounds familiar, you're not reckless. You're experiencing the hidden face of greed. Greed doesn't kick the door down. It slips in quietly. It doesn't say, break your rules. It says, relax, you've earned this. That's why greed is so hard to catch. It feels like clarity. It feels like momentum. It feels like growth. Let me paint a picture. A trader takes a clean setup. Risk is defined. Target is clear. The trade moves in their favor. Heart rate rises just a little. Confidence creeps in. And right there, at that exact moment, greed shows up wearing a friendly face. It whispers, this could be the big one. Don't cut it short. You don't want to leave money on the table. That voice doesn't feel emotional. It feels smart. That's why good traders make bad decisions. George Soros once said he knew he was wrong not by logic, but by physical discomfort. Most traders don't listen to that signal. They override it with belief. Here's the uncomfortable truth. Greed rarely shows up when you're losing. It shows up when you're winning. That's why it's more dangerous than fear. Fear is loud. Fear hurts. Fear makes you hesitate. Greed feels good. Greed tells you you're leveling up. Greed convinces you the rules were meant for other people. And that's where accounts quietly bleed. Let me ask you something else. Have you ever increased position size not because the setup improved, but because you felt in sync with the market? That's not strategy. That's emotion wearing a suit. And the market doesn't care how confident you feel. This is where a lot of traders get confused. They think greed is wanting more money. It's not. Greed is wanting certainty in an uncertain environment. It's the need to feel right, to feel ahead, to feel special.
That's why traders hold winners too long. That's why they move stops. That's why they add to positions late. They're not chasing money, they're chasing the feeling of being right. And here's something most people never hear. Greed is often triggered by success, not failure. One good day can do more damage than 10 bad ones. After a win, your standards slip, your patience thins, your tolerance for risk quietly expands. You don't notice it happening, you just feel different. Let me give you a real example. During the dot-com bubble, countless traders weren't chasing garbage stocks because they were ignorant. They were chasing because everything worked, until it didn't. Greed didn't tell them to be stupid. It told them the old rules no longer applied. That same pattern plays out in every market, every cycle, every account size. And if you're thinking, that won't happen to me, that's greed talking too. Now let's lock this in with 2 fact-based questions. Question 1. Why do traders abandon exits faster than entries? Question 2. Why does greed feel logical instead of emotional? Hold those, we're about to answer them. But first, understand this. Greed isn't a character flaw, it's a misinterpreted signal. It's your brain saying, I like this outcome, I want more of it. The problem is, markets don't reward wanting, they reward execution. Here's the answer to the first question. Why do traders abandon exits faster than entries? Because entries are exciting and exits feel final. Exits force closure. Greed hates closure. It always wants one more candle. And the second question, why does greed feel logical instead of emotional? Because it rides on confidence, not panic. Your brain believes it's optimizing when it's actually overreaching. That's the hidden face. Greed doesn't feel like chaos, it feels like control. If this is hitting home, drop a comment and tell me, what rule do you break most often when you're winning? Now here's the part that might blow your mind. You don't need stronger willpower to beat greed. You need earlier detection. The best traders don't ask, am I being greedy? They ask, has my behavior changed? Smaller details, slightly larger size, less respect for stops, more screen time. Those are the tells. And in the next chapter, we're going deeper than behavior. We're stepping inside the brain itself. You'll learn exactly what happens neurologically when greed takes over, why dopamine distorts risk, and how your brain literally lies to you during winning streaks. Once you see the wiring, the illusion breaks. Stay with me, because understanding the greedy brain is where real mastery begins.
Ever been up on a trade and felt unstoppable? Like you could see the market clearer than everyone else? In the next few minutes, you're going to learn what's actually happening inside your brain when that feeling hits, while your perception of risk collapses at the worst possible time, and how your mind quietly lies to you during winning streaks. Here's the promise. If you stay with me through this chapter, you'll understand the real neuroscience behind greed, dopamine, and decision-making. Not surface-level psychology, real wiring. By the end, you'll know why logic disappears when profits appear and how elite traders work around it. Quick question for you. Be honest. Comment below. When was the last time a winning trade made you feel smarter than usual? If you felt that, you've already met the greedy brain. Let's go inside it. Your brain evolved to survive, not to trade. Thousands of years ago, rewards were rare. Food, shelter, safety. When a reward appeared, your brain lit up like a Christmas tree. That same wiring is active every time a trade moves in your favor. The moment price goes your way, dopamine starts flowing. Not when you close the trade, not when the profit is realized, but when the possibility of reward appears. That's the first mind bender most traders never hear. Dopamine doesn't reward success, it rewards anticipation. So when you're up money, your brain isn't celebrating discipline, it's gearing up for more. And here's where things get dangerous. Dopamine doesn't just feel good, it changes perception. Risk feels smaller, certainty feels bigger. Your confidence inflates faster than your account ever could. That's why traders say things like, this thing is definitely going higher. The market's giving me a gift. I've got a feel for it today. That's not intuition, that's chemistry. Let me ground this with a real story. In interviews, many professional traders have admitted that their biggest losses didn't come from panic, they came from euphoria.
Ed Sekoda once said, "The elements of good trading are cutting losses, and cutting losses." Notice what he didn't say. He didn't say chasing wins, because the brain already does that naturally. When dopamine spikes, the prefrontal cortex, the part of your brain responsible for logic, planning, and restraint, goes quiet. You don't lose intelligence, you lose access to it. That's why greed feels calm. That's why it feels controlled. That's why it feels right. Your brain is literally prioritizing reward over survival. Now let me ask you something that might sting a little. Have you ever looked back at a trade and thought, "I knew better, but I didn't feel like it at the time"? That wasn't you being weak. That was neurochemistry hijacking the steering wheel. Here's another truth most people never hear. Winning streaks are more dangerous than losing streaks. Losses trigger fear, which tightens behavior. Wins trigger dopamine, which loosens it. That's why traders revenge trade after losses, but they blow up after wins. And if you're thinking, "I'll just stay disciplined," understand this: willpower is no match for dopamine. That's like trying to outsprint your own shadow. Now let's lock this in with two fact-based questions. First question: why does risk feel smaller after a win, even when the setup hasn't changed? Second question: why do traders feel more certain at exactly the moment uncertainty is highest? Hold those. We're about to answer them. But first, let me tell you something that might change how you see every trade from now on. Your brain does not experience markets in percentages. It experiences them in emotions. A 2% risk doesn't feel like 2%. It feels like opportunity or threat, depending on dopamine levels. That's why traders violate risk rules without realizing it. Their internal scale has been distorted. Now, the answers. Why does risk feel smaller after a win? Because dopamine suppresses the brain's threat detection systems. Your mind literally downplays danger to pursue reward. And why does certainty increase when uncertainty is highest? Because dopamine amplifies pattern recognition, even when patterns aren't real. You start seeing confirmation everywhere. That's the greedy brain in action. And here's the part that most books never tell you. You cannot think your way out of this. You must design around it. Professional traders don't rely on discipline in the moment. They rely on rules created when dopamine is low. They lock in position size. They predefine exits. They cap risk before emotion enters the room. That's not weakness. That's intelligence. If this is clicking, I want you to comment something powerful right now. Finish this sentence in the comments. When I'm winning, my biggest mistake is blank. Awareness starts with honesty. Now, here's the thing you may have never heard before. The goal is not to eliminate dopamine. The goal is to delay its influence. Elite traders don't stop feeling excited. They stop acting on excitement. They separate decision-making from execution. And that brings us to the next chapter. Because once you understand how your brain lies to you, the question becomes, how do you build rules that greed can't override? In the next chapter, we're stepping out of the brain and into real-world consequences. You'll hear how unchecked greed destroyed legendary traders and entire firms, and how discipline saved the ones who survived. Stay with me, because knowledge is power, but structure is survival.
Ever looked at a blown account and thought, "There's no way someone smart did this to themselves"? Then realized you've been walking the same road? In the next few minutes, you're going to learn how greed didn't just hurt beginners, it destroyed legends, collapsed empires, and erased billions. And more importantly, you'll learn the thin line that separates the traders who survived from the ones history forgot. Here's the promise. Stay with me until the end of this chapter and you'll understand why intelligence doesn't protect you in markets. Discipline does. You'll hear stories most traders reference, but almost no one actually understands. Quick question for you, and don't dodge it. Comment below, have you ever thought, "That would never happen to me"? Good, because that sentence has ended more trading careers than bad strategies ever did. Let's start with a hard truth. Markets don't humble beginners, they humble the confident. Some of the worst blow-ups in history didn't come from ignorance, they came from success. Take long-term capital management. A hedge fund stacked with Nobel Prize winners, brilliant math, elite models, unmatched confidence. They weren't reckless at the start. They were precise. But after years of winning, something subtle shifted. Position sizes grew, leverage crept up, risk assumptions softened. They believed their models had tamed uncertainty. Then the market reminded them who was in charge. One unexpected move, then another, and suddenly the smartest guys in the room needed a bailout to stop global collapse. Greed didn't show up as stupidity. It showed up as belief. Belief that they were different. Belief that past success meant future safety. Sound familiar? Now let's talk about an individual, Jesse Livermore again. The man who beat the market multiple times and lost it all multiple times. He didn't fail because he didn't understand price. He failed because after winning, he broke his own rules. He pressed when he should have protected. He believed when he should have measured. Greed didn't shout at him. It nodded quietly and said, "You've earned this." And here's the lesson most people miss. These traders didn't wake up greedy. They evolved into it. One exception at a time, one rule bent, one oversized trade justified. That's how accounts die. Not in explosions, in slow leaks. Let me ask you something uncomfortable. Have you ever ignored a stop because the market owed you? Have you ever held because closing felt like admitting defeat? That's not analysis. That's ego backed by greed. Now here's something you may never have heard framed this way. The market doesn't punish greed immediately. It rewards it just long enough to trap you. That's why bubbles form. That's why leverage expands at the top. That's why crashes feel shocking. Greed builds confidence. Confidence builds exposure. Exposure meets reality. Let's lock this in with two fact-based questions. First question, why do the biggest blowups happen after long periods of success? Second question, why do legendary traders fail the same way average traders do? Hold those. Before we answer, let me bring this closer to home. Every trader listening to this believes they're more self-aware than average. That belief alone is dangerous. The traders who survived history weren't the boldest, they were the most boring. Paul Tudor Jones famously said he's always thinking about losing, not winning. That's not pessimism, that's defense. He didn't trust his feelings, he trusted his rules. Now the answers. Why do the biggest blowups follow success? Because success inflates confidence faster than skill. Risk tolerance expands without conscious permission. And why do legends fail like everyone else? Because markets don't care about reputation. Biology doesn't respect resumes. Greed levels the field. If this chapter is hitting, drop a comment and tell me which scares you more, missing a move or losing money. That answer reveals more about your trading than any indicator ever will. Here's the final insight I want you to carry forward. The traders who survived didn't outsmart greed, they outstructured it. They assumed they would feel invincible at the worst times, so they built systems that didn't ask how they felt. And that's where we're going next, because stories are powerful, but frameworks save accounts. In the next chapter, we move from destruction to defense. You'll learn how to build discipline so tight that greed can knock and never get in. Stay with me, because knowing what went wrong is painful, but knowing how to prevent it, that's power. Ever walked away from a losing day thinking, I knew what I should have done, so why didn't I do it? In the next few minutes, you're going to learn how professional traders protect themselves from that exact moment, not with motivation, not with willpower, but with discipline, so tight that greed doesn't get a vote. Here's the promise. By the end of this chapter, you'll understand how real trading discipline is built, why rules fail when they're vague, and how to create structures that hold firm even when emotions spike. This is where theory turns into protection. Quick question before we go any further. Comment below, which do you break more often, your stop-loss rule or your position sizing rule? Your answer tells me exactly where your discipline is leaking. Let's clear something up right now. Discipline is not self-control. Discipline is pre-commitment. Most traders think discipline means staying strong in the moment. That's backwards. The moment you're in a trade, it's already too late to rely on discipline. When money's on the line, dopamine is active, fear is watching, and logic is under pressure. That's not when rules should be decided. That's when rules should already be obeyed. This is why great traders sound boring when they talk. They don't say, I felt good about it. They say, it was in my plan.
Let me tell you something about discipline that rarely gets said. Rules don't work because they're strict, they work because they're specific. Don't overtrade isn't a rule. Risk 1% per trade, max 3 trades per day is. Cut losses quickly isn't a rule. Stop goes here, no exceptions is. Greed can argue with vague rules. It can't argue with math. This is where the discipline shift happens. You stop asking, how do I feel about this trade, and start asking, does this fit my framework? And frameworks are built on 3 pillars: position size, risk limit, exit rules. Let's talk position size first. Most traders size emotionally. They go bigger when they feel confident and smaller when they feel uncertain. Professionals do the opposite. They size mechanically. Same percentage, same logic, same exposure. Why? Because size magnifies emotion. A great setup with bad sizing becomes a bad trade. A mediocre setup with perfect sizing can still be survivable. Paul Tudor Jones once said, "Don't be a hero. Size kills." That's not humility, that's experience. Now, risk limits. Here's something that might shock you. The best traders don't stop trading when they lose confidence. They stop trading when they hit a predefined loss. Daily loss limits exist for one reason. They prevent emotional spirals. They don't protect capital first, they protect decision quality. If you don't have a max loss per day or per week, you're trusting your emotions to tell you when to stop. That's a bad bet. Now, exits. This is where greed fights hardest. Exits feel like endings. Greed hates endings. So pros remove discretion. Targets are set early, stops are placed early, and most importantly, exits are honored. Not because the trader feels disciplined, but because the rule doesn't care how they feel. Let me ask you something straight. Have you ever followed your rules perfectly on paper, then bent them just a little in real time? That bend is where accounts crack. Now, let's lock this in with 2 fact-based questions. First question: why do traders break rules more often during live trades than in backtests? Second question: why do simple rules outperform complex ones under pressure? Hold those. Here's something you may never have heard explained this way. Discipline isn't built by adding rules, it's built by removing decisions. Every decision you make in real time is a chance for emotion to interfere. The fewer decisions left during execution, the safer you are. Now the answers. Why do traders break rules live but not in backtests? Because backtests have no emotional stakes, no dopamine, no fear of missing out. And why do simple rules outperform complex ones? Because complexity collapses under stress. Simplicity survives pressure. That's why elite traders say the same things over and over. They're not repeating themselves, they're protecting themselves. If this chapter is hitting home, drop a comment and tell me, what's one rule you know you need to stop negotiating with? Now, here's the shift. Discipline doesn't make trading exciting, it makes it sustainable. When your rules are solid, greed gets bored. It has nothing to argue with. And that leads us to the next chapter, because discipline alone isn't enough. In the next chapter, we're going deeper into risk itself. You'll learn why professionals obsess over survival, how risk calculations silence greed, and why lasting traders think in probabilities, not predictions. Stay with me, because once discipline is built, risk becomes your strongest ally.
Ever looked at your account after a bad week and thought, if I was right more often, I'd be profitable? In the next few minutes, you're going to learn why that belief quietly ruins traders, how professional risk management shuts greed down completely, and why the best traders in the world don't think in wins and losses at all. Here's the promise. By the end of this chapter, you'll understand why risk, not strategy, is the real edge, how probabilities replace emotions, and how thinking like a professional instantly lowers stress in your trading. Quick question for you, and answer it honestly. Comment below, do you care more about being right or about staying in the game? That one answer explains almost everything. Let's start with a reality check most traders avoid. You don't need to be right to make money. You need to survive being wrong. Greed wants big wins. Risk management wants long life. Only one of those keeps you trading next year. Here's something that might flip your perspective. Professional traders don't wake up asking, how much can I make today? They ask, how much can I lose and still trade tomorrow? That's not fear, that's clarity. Let me tell you a quick story. Mark Douglas used to say that consistency comes from thinking in probabilities, not predictions. Most traders hear that, few actually apply it. A probabilistic trader knows something simple. Any single trade means nothing. One trade is just one roll of the dice. Greed hates that idea. Greed wants this trade to matter. Risk management takes that power away. Here's how. When you define risk before entry, greed loses leverage. When you cap losses, emotions lose volume. When you size correctly, fear quiets down. Risk is not restriction. Risk is freedom. Because once downside is known, your mind can relax. This is where many traders get stuck. They think risk management limits profits. In reality, it limits emotional damage. Let me say that again. Risk management doesn't protect money first, it protects decision-making. That's why elite traders obsess over numbers that feel boring. Risk per trade, risk per day, risk per week. Those numbers act like emotional circuit breakers. When greed starts whispering, the math says no. Paul Tudor Jones once said he starts every day assuming he could be wrong. That assumption keeps him alive. Now let's talk about something crucial. Risk to reward. Most traders misunderstand it completely. They think a high reward to risk ratio guarantees success. It doesn't. What matters is expectancy. How much you win when you win, how much you lose when you lose, and how often each happens. Greed focuses on the upside. Professionals focus on the distribution. They ask, if I repeat this trade 100 times, do I survive? That question kills emotional trading on the spot. Now let me ask you something that might sting. Have you ever held a losing trade because closing it would ruin the day? That's greed trying to protect ego, not capital. Risk-based traders don't negotiate with losses. They accept them as rent paid to stay in the market. That mindset changes everything. Losses stop feeling personal. Wins stop feeling intoxicating. Everything becomes data. Let's lock this in with two fact-based questions. First question, why do traders with high win rates still blow up accounts? Second question, why do low win rate traders sometimes outperform everyone else? Hold those. Here's something you may never have heard explained this cleanly. Markets reward asymmetry. Small losses, occasional big wins, controlled exposure. High win rates often come from avoiding losses. Avoiding losses create large losses. Low win rate traders accept small losses quickly. They wait for size to work in their favor. Now the answers. Why do high win rate traders still blow up? Because one oversized loss erases dozens of small wins. And why do low win rate traders outperform? Because their losses are capped and their winners are allowed to breathe. That risk did that, not prediction. If this chapter is clicking, I want you to comment this sentence below and finish it honestly. My biggest risk mistake is blank. Awareness turns into correction. Now here's the calm truth. Once risk is mastered, greed loses oxygen. There's nothing left to chase, nothing to force, nothing to prove. Trading becomes execution, not emotion. And that leads us to the next chapter, because once greed is neutralized and risk is controlled, something deeper happens. Your identity changes. In the next chapter, we're stepping into that transformation, from emotional trader to calm executor, from outcome chaser to process-driven professional. Stay with me, because when risk is mastered, the trader finally grows up. Ever notice how some traders feel calm even when the market's going crazy, while others feel like every candle is a personal attack? In the next few minutes, you're going to learn the identity shift that separates emotional traders from professionals, why mastery feels boring on the outside, and how becoming a calm executor changes everything, not just your trading, but how you think. Here's the promise. By the end of this chapter, you'll understand why real growth in trading doesn't look like excitement or adrenaline. It looks like silence. And once you step into that identity, greed stops having a place to land. Quick question for you. Don't overthink it. Comment below. Do you trade to feel something or to execute something? That answer tells me where you are on the journey. Let's talk about identity. Most traders think their problem is strategy. It's not. Their real problem is who they think they are when they trade. An emotional trader sees each trade as a statement about intelligence, about worth, about being right. A professional trader sees each trade as a task. No drama, no attachment, just execution. That difference is everything. Here's something nobody tells you when you start trading. At first, chaos feels exciting. Fast moves feel like opportunity. Big wins feel like proof. But as you evolve, something strange happens. The better you get, the quieter it feels. No rush, no spike, no story, just decisions. That's why many traders sabotage themselves right before consistency. They miss the emotion. Greed isn't always about money. Sometimes it's about stimulation. Let me ground this with a real example. Jim Simons, one of the most successful traders of all time, didn't rely on gut feel or excitement. His approach removed emotion almost completely. Why? Because emotion creates noise, and noise creates mistakes. Elite traders don't feel more, they feel less. Not because they're numb, because they're focused. Now let me ask you something uncomfortable. Have you ever felt disappointed after a winning trade because it didn't feel exciting enough? That's the old identity fighting to stay alive. The emotional trader wants validation. The professional wants consistency. Here's the shift that changes everything. You stop seeing trading as self-expression and start seeing it as execution under uncertainty. No trade defines you. No day defines you. No win upgrades you. You are not your P&L. That realization is freedom. Let's lock this in with two fact-based questions. First question, why do calm traders outperform emotional ones over time? Second question, why does trading feel boring right before consistency arrives? Hold those. Before we answer, let me tell you something you may never have heard this clearly. Confidence in trading isn't loud, it's quiet. The most dangerous words in markets are, "I feel great about this." The safest words are, "It fits my plan." Professional traders don't look confident, they look detached. That detachment isn't weakness, it's mastery. Now the answers. Why do calm traders outperform? Because they don't leak energy into decision-making. They follow processes instead of impulses. And why does trading feel boring near consistency? Because excitement fades when randomness is accepted. You stop chasing outcomes and start managing risk. Boredom is often a sign you're doing it right. If this chapter is hitting, I want you to comment this honestly. What emotion do you secretly chase when you trade? That awareness matters. Now here's the final piece of this transformation. When your identity shifts, greed doesn't disappear, it becomes irrelevant. You don't fight it, you don't suppress it, you simply don't listen to it. Execution replaces emotion, process replaces prediction, and something unexpected happens. You stop trying to win today and start building a career. That's the line most traders never cross. And in the final chapter, we're taking this beyond charts and accounts. We're talking about mastery that lasts, about living above greed in markets and in life, about committing to growth instead of impulse. Stay with me, because once identity changes, the game changes forever. Ever wondered what happens after you stop chasing every move? After greed no longer runs the show? In the next few minutes, you're going to learn what mastery actually feels like, why the calm traders always outlast the loud ones, and how living above greed in markets quietly upgrades your entire life. Here's the promise. By the end of this chapter, you'll understand why the final level of trading isn't about making more trades, it's about becoming a different person. This is where discipline turns into identity and control turns into freedom. Quick question for you, and I want you to answer it honestly. Comment below. When was the last time you walked away from a trade feeling calm, win or lose? If that's rare, listen closely, because this chapter isn't about technique, it's about altitude. When greed fades, something strange happens. Trading slows down. Your mind gets quieter. You stop checking charts like they owe you something. And for the first time, you're not reacting, you're choosing. Most traders think mastery feels powerful. It doesn't. It feels peaceful. That's why so many people never reach it. They confuse intensity with progress. But intensity burns out. Peace compounds. Let me tell you something about the traders who last decades. They don't talk much about trades. They don't brag about wins. They don't chase excitement. They protect their energy like capital. Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." That's not just investing advice. That's a life principle. Greed feeds on urgency. Mastery lives in patience. And once patience becomes your default, everything changes. You stop forcing trades. You stop arguing with the market. You stop needing to prove anything. The market becomes a place you visit, not a place you fight. Now let me ask you something deeper. Have you noticed how the same emotional patterns that hurt your trading show up in life too? Rushing, overcommitting, needing more. Trading doesn't create those traits, it exposes them. And when you master greed in markets, you start mastering it everywhere else. You wait before reacting. You think before spending. You choose long-term over now. That's why great traders often become calm people, not because trading fixed them, but because it forced them to face themselves. Here's something you may never have heard said this plainly. The final edge in trading is self-respect. You stop taking bad trades because you respect your time. You stop risking too much because you respect your future. You stop chasing because you respect your process. Greed disappears when self-respect shows up. Let's lock this in with two fact-based questions. First question, why do traders with strict rules feel less stress even during drawdowns? Second question, why does long-term success feel quieter than short-term wins? Hold those. Before we answer, let me paint the final picture. A mastered trader doesn't need to trade every day. They don't need to recover losses emotionally. They don't need validation from the screen. They execute when conditions align and walk away when they don't. No drama, no regret. Now the answers. Why do strict rule traders feel less stress? Because uncertainty is already priced in. They've accepted loss before it happens. And why does long-term success feel quieter? Because consistency replaces adrenaline. Stability replaces spikes. That calm you feel, that's not boredom, that's control. If this chapter resonated, I want you to comment this sentence and finish it honestly. Greed shows up in my life when blank. That awareness matters more than you think. Now here's where we stand. You've seen how greed hides, how it rewires the brain, how it destroys legends, how discipline and risk shut it down, and how identity transforms the trader. What's left is commitment. In the final chapter, we're bringing this full circle. This isn't just about trading better. It's about choosing who you're becoming. A call to action, a line in the sand, a decision to grow instead of react. Stay with me, because mastering greed isn't the end of the journey. It's the beginning of a higher standard.
Ever finished an audiobook, felt inspired, then went right back to the same habits the next day? In the next few minutes, you're going to learn how to make sure that doesn't happen this time. This chapter isn't about motivation, it's about commitment, about drawing a line and deciding who you are when the market tests you again. Here's the promise. By the end of this chapter, you'll know exactly what to carry forward, what to leave behind, and how to lock this mindset in so greed doesn't slowly creep back into your trading life. Quick question before we go any further. Comment below. What's one habit you know is holding your trading back, but you haven't fully let go of yet? Be honest, nobody's grading you. Awareness is the first move. You've come a long way to get here. You've seen how greed hides behind confidence, how your brain gets hijacked by dopamine, how legends fell not because they were dumb, but because they stopped defending. You've built discipline, learned risk, and shifted identity. Now comes the part most traders skip: living it. Because knowledge doesn't change behavior, standards do. Let me tell you something real. Every successful trader you admire made a quiet decision at some point. Not a flashy one, not a motivational one, a private one. They decided that their future mattered more than today's excitement. They stopped negotiating with their rules, stopped chasing the rush, stopped trying to feel smart. They chose to be consistent instead of impressive. That decision doesn't show up on a chart, but it shows up in results. Here's something you may never have heard said this clearly. The market will always invite you back into greed. After a win, after a loss, after boredom, after confidence. Mastery isn't avoiding the invitation, it's declining it automatically. That only happens when your standards are non-negotiable. So let me ask you something important. What kind of trader do you want to be remembered as, even if no one ever sees it? The one who chased every move, or the one who survived long enough to let compounding do its job? Greed wants speed. Growth wants patience, and patience always wins, quietly. Now let's lock this in with two final, fact-based questions. First question: why do most traders relapse into old habits after learning good psychology? Second question: why do the few who succeed keep repeating the basics instead of searching for secrets? Hold those. Here's the answer to the first. Most traders relapse because they treat mindset as information, not practice. They listen, but don't install routines. They understand, but don't enforce boundaries. Mindset without structure fades. And the second answer: the traders who win long-term repeat the basics because basics are armor. They don't get bored of discipline, they get protected by it. That's the difference. So here's your call to action, and it's simple. Commit to fewer trades, better rules, and deeper patience. Commit to judging yourself by execution, not outcome. Commit to walking away when conditions aren't right, even if that means doing nothing. Doing nothing is a skill. And if this audiobook helped you see your trading more clearly, do one thing right now. Subscribe to Psych Rich. Not for hype, not for signals, but for continued mental sharpening. Share this with one trader you know who keeps getting in their own way. You might change more than their P&L. And if you've listened this far, I want you to comment this sentence and finish it honestly. From today on, I commit to trading with blank. Because saying it out loud makes it real. This isn't the end of the journey. It's the standard you live by moving forward. The market will still test you. Greed will still knock. But now, you know how to answer. Stay disciplined, stay patient, and remember, markets don't reward desire. They reward control. This is Psych Rich, and this is where your next level begins.